All right, let's dive straight into it. Today's key macro data. First, we start with retail sales. They came in stronger than expected, expected to be at 2/10, came in at 6/10. Consumers are still pretty strong. They're pretty still resilient, right? Looking at the year over year data, right? Oh my God, inflation's too hot. Consumers are going to overspend. No, not really. Because if you look at the year over year data, that suggests that the economy is still cooling. You can see year over year. So from a year ago, the retail sales actually fell from the previous month, right? So the economy is still cooling. If we go all the way back to January through of 2022 through 2023, the economy is still cooling, and this really reflects exactly what the market wants to see: not too hot, not too cold, a steady economy, and that puts us right in the golden pocket, or Goldilocks per se. Sure, producer prices beat estimates, but it's all oil. We know that. We know that that oil surging is going to price it. There's no surprise here. The market wants to see certainty. It wants certainty. So we know, it's coming from oil prices surging. Now, could it be a nasty headwind in the future? Sure. But right now, there's no surprise. And guess what? The market already sniffed this out. The market already sniffed out that PPI, producer prices, would be higher because of oil yesterday in the CPI report, right? So it's nothing new. And so far, we're getting a positive reaction. The market is up today. Same thing for the year over year PPI. It was higher than expected. The market already sniffed it out the prior day. No surprise there, right? As a matter of fact, these levels, right? If we actually look at the producer prices over the long term, well, we're looking here at the last 13 years. This is pretty much the average. We're right at trend. There's really nothing to worry about, right? Maybe it does surge higher, but this is the level you want to be at. These are the levels the market expects, and you just keep your eyes open. So the market is reacting positive because guess what? Inflation is coming down. It's back to normative levels. If we look at the month over month, right? So this is more volatile versus last month for PPI. It came in as expected on the core side, right? I'm sorry, I didn't mention that. We're talking about core now, switching over to core, which I think is why the market is up so much. Core is at 0.2 tenths. You annualize that, that's 2.4% inflation. You're right at target. You're basically at target. And the market is looking at producer prices at target. Okay, at the Fed's target, pretty much 2.4%. Okay, great. Okay. If we look at, year over year, so this is the year over year segment, right, of producer prices versus last year, they're right in line with expectations this morning. And this is probably the highlight for the bulls here. The highlight is that producer price inflation outside of energy, okay, outside of energy, we're looking at core here, is back to target. We're pretty much back to target, and the market is digesting this very positive. That's why we're going higher, or at least breaking out on a technical basis to a small degree, right? So we have oil, and this isn't the best story. We're not actually at the best story here, because the better story is the dollar is actually rolling over. That's not the case. So oil's up today. We got oil up. We got dollar up. We got yields up. We got stocks up. Everything's up. The VIX is down. Volatility is down. All right. So let's take a look at the technicals. After we go through the technicals, by the way, we got Tesla breaking out again. Tesla really breaking out today. Let's dive in really quick. If you're a Tesla holder, you probably don't care. If you're not, if you are, there's a lot of momentum here. Look at, we're getting back to that 278 level that we put in 2 days ago, and very sharp wedge pattern all day. It was tricky to get in here. It is, elevated, but let's go to the S&P. Let's take a look at the S&P, kind of what's going on with S&P 500, and go through. Oh, look at that. Look at that move. Look at that beautiful move to the upside. S&P also breaking out. The market's digesting core here, right? And look at this gap up. We just talked about this triangle. Can we hold 444? That was a level. Can we hold 444? It looks like we are starting to hold 444, right? Very, very constructive there for the market. Let's take this off. We don't need this. Very constructive for the market. So now we're headed for 450, 453, 454. And again, the story here, right? The story here, we have S&P moving up. The story here is that the core inflation part of the segment of core inflation, right? The market is not pricing in, by the way, a rate hike. It's at a 97% chance of a pause here in the next 6 days, right? The next meeting, it's anticipating a pause. If that were to shift, it would be negative. But right now, that's what we're looking at, because the gasoline and food, right? Food's actually coming down. We talked about that yesterday, is very volatile, but the core stuff, the structural stuff, wages are not going higher, right? Core is not moving up. So the core structural inflation data is not moving higher. The market can deal with gas going up because that also pumps earnings. It also makes some other things more expensive, but it doesn't destroy the economy, right? It's not structural. It will come down at some point, and you can adapt to that, right? If anything, it slows down the consumer, and the consumer is just not slowing down at this point. And we're gonna actually get to a video that talks about why is the consumer not rolling over yet. Maybe they do roll over. I anticipate they do slow down, a little more further into the second half of the year. But as long as they have a job, right? I think we're good here. A lot of people coming in the labor force balancing it out. So yeah, S&P is up. Now let's look at the macro forces really quick. 10-year yields also up. Okay, but you're getting oil, right? This is the big threat to the market. And right now the market is shrugging off this big surge in oil. This was August. I'm sorry, that this was July's this is what went into July CPI, okay? Which we got in August. This is what we got last month. Here's what we're looking at for October. It doesn't look good. It looks like CPI is going to go up again because this is a big input to CPI. The question is, now you got to look further out. Does this, do we get above 100? Do we just keep elevating? At some point, it becomes a big risk. I thought it'd be earlier, but so far it's not, it's not really coming out. But you're not seeing bond yields rise. The bond market is not reacting, is not having a fit here. We're not getting a big upside move or a selling of bonds, because I think what's going on here is the bond market is saying, okay, core inflation is coming down. The Fed should be pausing. Maybe they hike again. Maybe they decide to hike in not November because there is no meeting. I'm sorry, there's no meeting in October. We get a whole month off. Maybe they do hike in November, but right now, those core numbers are coming down. Wages are coming down. There is no structural inflation that we're seeing here. So yields are not going higher. But we do have the dollar pushing out again, breaking out from the local high. The dollar is getting elevated here. This is posing a structural risk for sure. But you can get dollar up with stocks up at the same time. You can get that. It's not the best probability, but it does happen, right? If anything, you're like, okay, this is great. This is great. The dollar's up, oil's up, and the market is still moving higher. Okay, so what's the risks here, right? And we're going to get to the consumer collapsing, but the question is now good news actually good news? Because the recession calls continue to increase, right? We know inflation is coming down on the core side, housing inflation coming down, right? Structural inflation for housing, for wages, they're coming down. Those are the core areas. Now it's up to oil prices, and it looks like the market's kind of shrugging it off. Yields are not rising. Part of this too, nat gas is going nowhere, right? You're not getting commodity inflation. Nat gas is going nowhere. How about copper? Copper going nowhere, right? You're not getting commodity inflation. It's literally all oil. It is not a huge secular shift. It's probably a big trade here. We know it's from price cuts. Okay. And then two, to top it all off, the VIX is, decelerating. The VIX is making new lows. The VIX is now under 13, right? So the VIX is signaling risk on right now. And I know people say, oh, it's at the bottom, it's going to bounce. Sure, maybe it could bounce if we get another risk. But when you're at these low levels, it's really not linear. It's more so there's going to be a big slip. You're probably going to break down even further, okay, going forward, unless you get geopolitical risk, which we are not seeing. Now, check this out, right? We know the market is strong right now. Let's check out the actual, the different segments of the market. Banks starting to move up, right? The financials are moving up. KRE is not collapsing. It's holding that level. So regional banks are fine. Regional banks are holding in there. The market is pretty positive about what's going forward here. The consumer is not falling apart. You keep hearing the consumer is going to fall apart. Yes, I know student loans haven't came in yet, and it will slow things down slightly, maybe not. We'll see how it goes, right? XLE, obviously, we are going up on the energy side. We don't need to look at that. Solar coming up. But what I really wanted to focus on here was these big movers. We're starting to see communication services break out of this trend. Communication services. Who's in that segment? Zoom, right? Keep your eye on Zoom here. Zoom has really good fundamentals, so I expect that to go higher. XLI, right? Industrial is actually starting to slow down here, and you're getting consumer discretionary. I'm sorry, this is healthcare. Healthcare is still kind of stuck there, but you're getting consumer discretionary, which is going to be Amazon, Tesla, car companies, discretionary spending, which represents the strength of a consumer, this is breaking out. Like this is breaking out. I mean, it still has a ways to go, but you're getting a reflection of the market is getting very optimistic about the economy the economy strengthening here. Okay. Now, if we go to GDP, we actually did have the GDP nowcast get revised lower. So this is some tricky business here. Let's take a look at this really quick. Right. Atlanta Fed GDP now slashes Q3 GDP estimates to 4.9. So that was a big slash. GDP actually came down. But what does that also signal for the market? This could be a positive. I'm telling you, we're in Goldilocks. And Goldilocks is not too strong, not too weak, very cool data. Now GDP is getting revised lower. So what that means is, okay, core inflation comes down even further. Right? Core inflation comes down. It's not a collapse. We're not going negative. There's no GDP forecast going negative. So I'm sorry, you're not getting a recession here. You're just not seeing it. If that's what you want to see, you might be hearing that, but keep in mind, right? Keep in mind, fourth quarter, what are you getting? Fiscal policy. You're getting the government spending coming into the market, right? And if the consumer slows, expect the White House, whoever's in there, to start stimulating, start giving more checks, or at least speaking about it, right? Whatever that is. So you got to keep that in mind. Yes, we're in a cooling economy. Things are pretty slick here. Now let's talk about the consumer. I want to go over the consumer before we hit the technicals, and hear kind of what the market is talking about when it comes to the consumer. So let's check this out. Right, this is pretty much what the market. And we'll pause it. We'll see. What is the market actually thinking about this? When it comes to the consumer, or not the market, but what is some commentary about the market? Bank of America, these are obviously, they deal with the data and spending. So let's check this out.
He's chief investment strategist at Citi Private Bank, and David Tinsley is senior economist, Bank of America Institute. It's great to have you both here.
Thank you.
David, let me just start with you because you guys can kind of unpack this a little bit. How much of the spending we've seen in recent months, broadly speaking, is just price increases?
Well, some of it's that in retail has been boosted by gasoline prices. But in our data, when you look across the piece, you see very strong service sector spending as well. So, and when you look, really broadly at the sort of balance sheet of the consumer, it's in pretty good shape. So I'd say some, but certainly not all.
We've spoke with your colleague Liz, who says, and there's a huge debate about this, is the consumer's kind of like excess savings or dry powder, is it running out and we're about to face this trifecta of student loan repayments and higher gasoline prices and all, higher borrowing rates? Or are we still in a better position than we might have been a few years ago, supported by real wage gains? So what do you guys see happening there?
Well, what we're seeing is that on the deposit side, they're up about 30–40% across all income cohorts.
Amazing.
So that looks pretty solid. On credit cards, people aren't tapping their cards relative to their limits as much as they were in 2019. The utilization rates are still lower. So, in the round, we think there's dry powder still in the consumer.
So yeah, the data shows that, consumers still have dry powder. They're still spending on their credit cards. And we know the savings rate went down a little bit, right? But why could that be? That could also be that people are spending their savings. They're paying off the credit debt so they can keep spending, right? So, I don't trust any data. Well, I mean, you don't have to trust any data. We're seeing the retail sales come out still stronger than expected, but not like insane, right? Not insane. Credit card debt's at all-time highs. It's always at all-time highs. Credit card debt's been climbing for the past forever to all-time highs. Has that deterred the market? No, because you're still spending. It's all about the payments, and if you have jobs, you're fine.
A few headwinds, student loans, as you say, but all manageable, I think, over the next 6 months or so.
How does that jibe, Steve, with kind of your view on things and what you think is going on with the consumer?
So look, it doesn't really lend itself to a complete bust or boom view. It looks like a deceleration. 3 years ago, we had an absolute depression in services employment. And services employment rarely falls very much, even in recessions.
Right, very steady.
And so to get all of that back is actually helping a lot. It's actually working through some of the problems we have in the goods sector. We have manufacturing recessions, trade recessions, and we're getting inventories down because of this persistent strength in services hiring. Now, the whole thing is growing half as fast as it did a year ago, and it doesn't just stop there. It'll probably continue to decelerate with some of these headwinds, but it's getting us to a place where we just are not going to have that collapse that happens when you have a full-blown drop in employment of serious magnitude.
More of a
Okay, so that is the key there. You're not getting a collapse in you really need a very sharp spike in unemployment for spending to collapse, for the economy to go into recession. But you're not going to get that as long as as long as there's jobs out there. Right? Yes, job openings are coming down. That is closing the gap, but they're still positive, right? There's still payrolls out there. You're getting more spend in manufacturing. When I look around here where I'm at in Phoenix, there's apartments being built like insanely fast, right? You got the TSM factories coming in here, onshoring, because part of the infrastructure bill or the Inflation Reduction Act, the CHIPS Act, is to bring manufacturing to the US. So they're building one here. Is it efficient? Probably not, but it's going to create more jobs, right? So people are still going to have jobs. You get some slowness in some areas, probably financials, but you get strength in others. So we're in a cooling economy, and this, just listening to the guys, it sounds like really the economy is in a golden spot because you're not getting exuberant spending. The only reason that you're getting hot inflation at all is from oil prices going up. So they pass that over to the consumer when it comes to services, but services aren't really, transportation costs are going up because of that reason. Everything else is falling. And that's constructive for the market. Maybe not your wallet, but it is constructive for the market. And that's why we see the market still moving up here.
cyclical thing. So when you look, so jobless claims, okay, last week we thought, well, maybe distorted by, Labor Day holiday, they were very low. This week, again, very low. It doesn't seem like a seasonal issue. It seems like a cyclical tell. And do you think that this ongoing rebound in services is still why? How much longer does that have to go?
The claims data, again, really high quality data. There's no samples, everything. We love this data, but it's not showing the entire picture. When you take a look at job openings have fallen by 2.6 million.
Right.
And again, the net pace of hiring is decelerating. So the net firing or people being able to quickly find another job, it's still painting a picture of stability overall.
So David, if we kind of go, okay, well then maybe I can understand why a camp like Goldman's goes, okay, recession odds are down to just 15% in the next 12 months. I'm amazed to hear you say that credit card utilization rates aren't at the levels they were in 2019, at the same time as we've seen delinquency levels reapproaching where we were back then, and rates kind of on a nominal basis are so much higher.
Yeah, I mean, behind all of this is really the labour market strength. So when you look at the lower income part of the distribution, wage growth has been at the strongest, above that of middle and higher income. So I think, that's driving, in a sense, the ability to borrow and the spending picture. So, there are corners of households, the market, where people are feeling some stress vis-a-vis, borrowing, etc. But it's minor, I think, really,
sure,
ultimately.
For now. So, Steve, the final question then is it comes down to the Fed, which is not expected to hike this month. I don't know what your expectation is if there's, maybe another hike in November when they start cutting. How does this shake out for them?
So they've done a lot. And they're doing more with quantitative tightening.
Yeah.
Just take a look. Again, it not only is the Fed reducing its treasury holdings, but foreign central banks appear to be doing this.
All right, so that's pretty much what we wanted to hear. Is why is the consumer not collapsing yet? Oh, well, student loan repayments. It's not going to make that big of a deal unless you get the whole economy starting to fall apart here, right? So that's kind of the case. I want to point this out also, right? Bond volatility, right? When we look at bond volatility, that's also coming down. This is an important VIX volatility. You think about the VIX, but this is an important metric here, because what it tells you is that the bond market is healthy, right? The treasury issuance is starting to slow down, right? The treasury issuance should be slowing down, as it's going to keep coming, but it's going to start slow down. And that means your collateral is starting to remain healthy. You get healthy collateral in the treasury market, right? So if we go to the 30-year, it's trying to push up. The rates are trying to push up. That's an example of more issuance coming into the market. You go to the 10-year, right? Not as bad. You go to the 5-year, not as bad. You go to the 2-year, pretty flat there. So we're stuck at this level, which means this might be the ceiling for rates. This might be the ceiling for rates. And who's going to come in and buy all those bonds? I don't know. Maybe we are higher for a little longer, but this also tightens financial conditions for the Fed. The dollar moving up tightens financial conditions for the Fed. And if you have that case scenario where this goes up, energy prices going up, this tightens financial conditions. The Fed doesn't have to tighten. The Fed can pause here. And once they fully, communicate that signal to the market, to the bond market, you're going to see these yields start to come off, right? You're going to see the yields start to come off. Maybe they don't drop dramatically, but you will see the yields start to come off. So, just taking a step back, looking at the technicals, we're now breaking this wedge pattern, right? We are now, I'm going to actually switch this up. Let's switch this up to there we go. So we can see the full chart. You're now getting the S&P start to break the wedge pattern. You're even getting a little bit of lift from Bitcoin this morning because we're getting closer to regulation. We're getting closer to positive regulation on that front. So now we've broken this wedge, pretty much a breakout, short-term breakout, not like a big term breakout. The big breakout would be getting back above 453. Then we head for the year-to-date high. We head for the year-to-date high after that. We are now clearly above the 50-day moving average, right? That's actually where we opened up we opened up and we sold off this morning right into that 50-day moving average. There's buyers stepping in, right? There are buyers stepping in. Let's check the volume. Is it great? It's not great, but it is consistent over the past 2 days, right? If you look over the past 6 days, it's mostly green. We had one red day. You had one red day. You had a pullback, a support, and a climb higher. And we still have the reverse repo liquidity moving up. I think that's kind of supporting the market here, giving it confidence. We have earnings being revised up. We say this every single day until that changes, right? Now GDP is getting revised down a little bit. So maybe earnings actually won't be as strong. We'll see. What I think happens is the earnings become strong in certain segments and maybe weakness in others, which is why we probably see Target very weak in the short term. People are not buying as much. I believe Netflix sold off because they lowered their guidance, right? Netflix oh man, they're getting smashed. They're lowering their guidance, and this is literally a reflection that consumers are going to spend in certain areas and not in others. Plus, Netflix has sucked over the past couple months. I think they haven't had anything really that great. Just a bunch of copycat stuff. Either way, like you're seeing that revisions are coming down and that capital is shuffling into other, into other markets, into other stocks. So it's a stock pickers market at the end of the day. We are looking at a stock pickers market. I wanted to take a look at the Magnificent Seven really quick. Apple, is there demand for, Apple right on wedge, right on the wedge. Apple's right on the wedge, right? You're sticking in there. The buyers are stepping in on Apple. Amazon making new highs. Amazon's probably leading that consumer discretionary segment of the market because they're coming out with the AI pretty soon here. Oh, AI is not that great. Yes, AI is very powerful. Increases your margins, demand. Future is AI. That's what the war is about right now. Chips and AI. Google making new highs year to date. Meta starting to break out again. So you're getting some of the Magnificent Seven breakout while others are weaker. Microsoft, pretty weak to it's kind of weak. Netflix, is it really part of the Magnificent Seven? I don't know. Some people put it in there. Maybe you can say the Magnificent Eight, right? Tesla breaking out. Okay, it hasn't had the big push, but it's been moving up for a while. Now from the pullback from that low, Tesla's now up 30%. Okay, could pull back again and support. I've been looking at this. I wanted to buy that breakout, but very slow today, very slow volume. Didn't look that great. So just took a step back on that. Palantir, still, Roku weak, SoFi weak. These guys have been pretty weak here. TSM weak, Zoom, some strength today. You got communication sector up. I think Enphase is up green finally. Enphase might actually be bottoming here. This might be a big blow, not blow off top, but this might be a big rally here for Enphase because the RSI is starting to pick up and it's been oversold for a while. So Enphase might have a nice move. Not trade advice at all. Oh, look at that. Another squeeze from Carvana. Carvana squeezing higher again. Coinbase really doing nothing. You need the regulation for Coinbase really to come in. Adobe, Airbnb, PayPal, catching a bit here. There's market participants stepping in for sure. So you do have that. Let's look at the Dow. What is the Dow doing? The Dow's still on trend. The Dow's catching a little bit of steam here. Okay, it's back above the 50-day moving average. IWM's probably the weakest because we still have a high rate. So yeah, IWM's still pretty weak. It's at the 200 daily and the 100 daily moving average, still pretty weak there. So I think, yeah, a lot of the strength is coming from big tech again, right? Visa, I think, is pushing up. McDonald's. Oh, Visa had, okay, so nice. Visa had, you're getting this capital getting reshuffled. Visa makes a new high and then sells off. So this is a stock picker's market. These big caps are also selling off. What is JP Morgan looking like? JP Morgan starting to bounce. Capital is shuffling around, trying to find who has the best catalyst going forward. Right now, I think in the big tech, it's going to be Tesla, Amazon, Meta's up there. Tesla and Amazon, I would say. Apple's going to consolidate for a little longer, it looks like, for the mega caps. And then you still have AMD, right? AMD still winding up for that big swing. Eventually, that big swing. Let's look at the weekly. What is a weekly looking like for AMD? Okay, so yeah, once you get this 50-day moving average start to get a little steeper, that's where the momentum starts to pick up. So you want to see the bull cross. This might have some time, need some time to actually start to develop for AMD, right? You want to see steepness in that 50-day moving average. That's what I would say anyway. All right, let's see if we can Dow, VIX. Advanced decline, that's another one. Oh, okay. Yeah, today was very strong. Whoa, ADD. I'm going to throw this up here really quick just to show the market breadth. Got a lot of market breadth today for the intraday. And what this shows is following the numbers this morning, right? The PPI, core PPI being low, retail sales being stronger than expected. The economy is still strong. It's still cooling, but it's not falling apart. And core PPI is coming down. It's Goldilocks. You had 2,000. You had an advanced decline of 2,000. So we got up to 2,000 stocks this morning that were advancing versus declining. It's really positive. It's really positive price action there, right? Those are the market internals for the most part. You're getting that rotation coming into the market. If we look at, how many stocks are moving above the 50-day, I think it's still kind of suppressed. We're at 38% above the 50-day in the S&P anyway. We're back above 50% of stocks above in the S&P 500 above the 100 daily moving average. We're back above the 50 percentile on the 200 daily moving average. So there's some market strength coming in here. And it all dials back to the market is not pricing in a cut. I'm sorry, in a rate hike. It's not pricing in a rate hike. And you can look forward and say, well, they're probably going to hike again. They're going to hike at some point. Well, right now, I mean, the market is not reacting that way. The market isn't reacting as if it's such a bad thing. I would say patient here on Tesla, though. There is, if we put on, let's see if I could throw the MACD, because there's some really strong confirmation here for MACD strategy. Let's see. I never really used the MACD, but I did see this. I saw this the other day. Oh, no, I don't want that. I don't know what that is. There's too many strategies on here. There's way too many on here. I'm just looking for MACD, just a normal MACD. Maybe this one. Okay, yeah, this should work right here. So if you go to the monthly chart, you're getting a big secular signal here for Tesla. Yeah, this one looks a little different. This one does look a little different here than it did before. This crossover happened a lot further. All right, I'm going to look at the other one. I'm going to look at this one. trying to find it on TradingView, but I'll go to this chart. Just go to the regular MACD. So if I go to the regular, just the normal MACD, there's so many different plugins you can do for different assets. And if you're not familiar with Thinkorswim, MACD, looking at the MACD monthly. Well, that's weird. Oh, there you go. It's delayed. Okay, let's take that off. All right, so yeah, MACD monthly. There we go. Take that off. And looking at Tesla, this is very technical, but a lot of the a lot of the technicals are starting to line up. So you could see the MACD. Let's pull this down. Pull this up. It's starting to break out, right? From the negative, it's starting to go positive. You're getting a lot of positive momentum. You're getting the MACD little indicator the exponential moving average cross above the other one, which is a bullish divergence. Last time we came from this negative, right, on the MACD, and this is just one indicator, but it just shows you last time you crossed, this was what was this, this was like 2019, right? This is 2019 when the kind of during the when the Model Y came out, right after Model Y started to get to deliver, and you had a humongous breakout. Now you did have COVID hit, but it only happened for a little bit, right? Either way, the Tesla price exploded. So the MACD hasn't really cocked back this far and started to show this momentum for a long time. You really haven't seen this. Now it's starting to move up again. So you're getting that MACD price action there. I don't really look at MACD too much. Let's go to the weekly, see what it looks like on the weekly chart. Crossing over on the weekly. It's pointing straight up. Should be a big run here. Now that I'm here, I want to see what Bitcoin's looking like. Oh yeah, looks like Bitcoin's also getting some MACD crossover. I knew it. There we go. So yeah, it looks like on Bitcoin futures. I mean, these are Bitcoin futures, but same thing. You're getting a crossover on the MACD. And after bouncing today, I know a lot of people are expecting a collapse in crypto, but when this is where you get bullish. This is really where you start to get bullish on crypto. Got the MACD crossover. Let's see what ETH looks like. Everybody gets excited once price really breaks out. They missed the whole breakout though. ETH starting to cross over also. Yep. It looks bullish to me. Big man's coming. What up, big man's coming? I see you in there. October 13, 175 Apple call trying to get that 450 fill. Oh yeah, on Apple right now. What up, Kens? I see you, Kens. Haven't seen you for a while. Hope everything's going well. Yeah, I'm just looking at MACD on some of these charts. The MACD and the dailies crossing over. What does that monthly look like? Ooh, on ETH, it looks like the MACD is also crossing over back positive. It's kind of struggling here, but this is the point. This is where you get very bullish on the market. And you're obviously looking at the cycle. It's not like you're bullish for the next day or the next 2 days or the next 3 days, but you have BlackRock will not be denied, man. BlackRock is not going to be denied. It's funny. I put a video on TikTok. It got banned talking about crypto catalysts and BlackRock in the World Economic Forum. Got shut off. They shadow ban me. So they're literally telegraphing their moves, and here we go. This is it. Let's see what Amazon looks like. Amazon's already starting to break out. See, Tesla's barely starting to on the monthly. I'm looking at this monthly RSI. I mean, this monthly MACD plus the RSI. Google's came out. Netflix. Yeah, Netflix already broke out. Tesla's. It looks like Tesla's the only one that hasn't really moved. I bet Apple's up there. Yeah, Apple's already made its move. Microsoft has made its move. Shopify, man, I haven't looked at Shopify for a while. It looks like Shopify is consolidating. CRM, Salesforce. I gotta add those in on the tech play. CRM. Actually, let me add those right now. CRM. Get that on there. Salesforce and Shopify. I think they do pretty well in the market going forward. Also, Shopify, Salesforce. All right. Palantir had a huge, I know that had a MACD crossover. It's starting to cool off still. It might have some more room to cool. It moved up so quick. I haven't even looked at Nvidia. Look at Nvidia's MACD. That once that thing crossed over, I mean, that was March. You went from 235, you doubled. You almost doubled. Now the MACD, you only want to really focus on it when it does start to cross. When you get this cross right here, you get the cross on the MACD, you start to turn green, you look at that, and then you focus in on the technicals, like, okay, where the technicals actually aligning here, not just the MACD. How's the macro looking? Core inflation's coming down, right? Is there any catalyst coming forward? Or for Tesla, Cybertruck, you have Cybertruck, you have full self-driving. That's really going to take you to all-time highs. I think that takes you to, I think full self-driving actually takes you to that Morgan Stanley analyst's price target to 500. Yeah, that'll start a really monstrous rally if you get that. All right, what else are you guys looking at? Oh, how's the baby? Good. Actually, I just got a picture today. He's good. He's growing. 100% Ken's. Yeah, the baby's growing. Elijah is his name. He's getting big. He has a lot of hair. We'll get him in the market as soon as he's, ready. Probably when he's 5 years old, we'll get him on the stock market, get him trading. I know. What are you looking at, Ken's? What do you want me to look at? We're only 30 minutes in. Pretty boring market. If you want to look back on YouTube to hear the actual report, it's probably like the first 5-10 minutes, but very positive report we got here. Roblox. All right, let's take a look at Roblox. I'm gonna switch. Should I switch charts? Actually, no. Let's keep it here. RBLX. Kathy Wood started buying Roblox, right? She sold some. What has she sold? DraftKings. Man, she's crazy. I don't know what she's doing. I know a lot of people don't understand what she's doing, but unless you're in there, you really just don't know. But yeah, she's buying. Now this is a big wedge for me. This is probably going to take a lot more time. But for Roblox, look at that wedge. You probably got a lot of time left. But that's when you buy if you're convicted. Oversold. Extremely oversold. Let's see. Roblox, all-time high was 141. It's at 20. It's a 5x. Back to all-time highs if they haven't diluted their shares. It's at the bottom of the trend. Kathy knows what she's doing. But she sold DraftKings. She did sell DraftKings. So Roblox, it looks like you're at the wedge. I would say above, if it can get back above. I'm not familiar with the price action of Roblox, but just looking at this, you got this descending, you got a little bit of pattern here. So you could make it look like this. You probably want to get above 29.50 You want to hold above 29.50 for the confirmation. Like today, Tesla is holding above 275, but it's not moving fast. The RVol, the relative volume, was like 1. So I was like, it's not going to last. It's probably not going to last. Not big blow off top. You still go into Friday. We could get a monster sell off on Friday, but just to go find support. Yeah, Roblox, not too bad. Right now, it's just trying to find its way. I think this thing has a lot more time to go. It looks like it still has a couple months. I don't know the fundamentals of it. And DraftKings, what about DraftKings? DKNG, is that getting? Oh no, it's not. So she sold. I know she sold some DraftKings. Didn't react too bad. Still climbing. Still climbing up here. You know who's really getting smashed is Teladoc. Buy down low, more up than down. Small investment. Yeah, for sure. Small investment. Man, Teladoc just can't catch a break. Broke out of the downtrend and then makes a new low. That's not good. I need to sell my position. I just have a position for 2025, so I'm like, we'll see. It's not that big. It's pretty small. Just do it to Roblox. I don't know if I believe in Roblox like that. I would need it to break this downtrend. Oh, it looks like it is breaking the downtrend, right? Like right on target. Broke the downtrend, capitulating off the lows. Yeah, maybe this could be a nice play then. You saw a lot of volume come in yesterday or 2 days ago. No, yesterday. A lot of volume came in. Could be solid. Could hold in there pretty strong. Now looking at who is this? Now it looks like you get a nice little cup and handle here. Now that we've broken to the upside, let's remove that for the SPY. So here's your trend. Here's your SPY's trend. Still trending up. Make that trend to all-time or back to the yearly high. And then pulled down this, which is pretty much a weird looking cup and handle. Okay, more pressure to the upside. Yeah, what's it going to take to bring us down? QQQ. Let's see what QQQ looks like. Appreciate the love, big man coming. Big man's coming. Hey, where are you out of again, big man? Where are you from? Where are you from? And where are you from, Kins? I always forget. You sound like you're from the Midwest, big man. You from the Midwest, huh? New Orleans. I knew it, man. I knew it. Yeah, you got some Southern in you. Okay. What about Kins? Where are you from? I actually had a roommate was from New Orleans. He was from New Orleans and he got rid of his accent, but yeah, you New Orleans guys, man, you guys stay with the earth. Got the 6th sense. Kens, where are you from, Kens? Unless you don't want to say it because, obviously it's like privacy. QQQ, yeah, QQQ's pushing up, man. I mean, looks pretty solid there. I'm going to switch it over to the big crypto chart because crypto is still cocking back, man. Everybody's scared. Everybody's negative on crypto. I mean, look at that trend. Oh, let's get rid of this. I don't want that. Still holding the anchored VWAP here. Let's turn this into a log chart. We don't look at normal charts past the daily chart. I mean, that looks like a bear signal right there. Like it could break down one more time, which is very possible. But you're so close to the lows. It's like, we'll see. You're very close to the lows, and you have a lot of catalysts. The market is starting to improve a little bit. I think ETH looks better than Bitcoin though. New York City. Okay. I see you, New York. Dang, you guys are complete opposite. New Orleans and New York. Pff, complete opposite there, huh? And I'm on the opposite of both of you. I'm in Phoenix, Arizona, where it's all dry. There's no culture. Yeah, ETH looks really solid. We haven't looked at the ETH to BTC chart. This thing is still consolidating versus Bitcoin. That's crazy. No drop. No drop. It's just still consolidating. It's going to be a monster move. Chainlink still consolidating there. Let's take this off. The only downside to Chainlink right now is probably from a price perspective is that the shares did get diluted. So it's going to take more to get back to all-time highs than it did before. But I think they're capped now. They should be capped now. We have plenty of water, sportsman paradise. Okay, over there. Yep. Jose, what up, Jose? You're in Phoenix? Okay, I'm in Goodyear. I'm over here in Goodyear. What part of Phoenix you in from, Jose? What up, 8? Where you from, 8? I see you in the chat. My sixth sense tells me that crypto's about to break out, around the corner. We're getting close. Everything's quiet. Everything gets really quiet. You're in North Phoenix. Okay, cool. North Phoenix. That's what's up. What platform do you use for crypto with higher leverage? To be honest with you, I would never advocate for high leverage on crypto. It's already a leveraged asset to some degree. I use Coinbase, but I don't leverage on anything. There's some things, there's some places you can leverage, but I think it's kind of sketchy. I just wouldn't do it. I wouldn't advocate for it. Is it Bitfinex? I think you can on Binance. I just wouldn't trust other platforms, to be honest with you, until you get that Bitcoin ETF. And then BlackRock is buying it. They're probably already buying it. We're having a blow off too this year. Oh, hey, appreciate it, DWIL. What's the D stand for, man? Great market analysis. Hey, thanks. I appreciate it. I'm glad I could bring some value to the space. I just try to get straight to the point. The macro is looking good. I'm going to repeat it before we're done here too. We're still in a bull market. And we're getting close. We are getting close. Total crypto market. I mean, the longer the consolidation, the bigger the breakout. I believe this is the longest. Okay, it's not the longest. It's one of the longest consolidations after the high. Let's see the last time, because the total crypto market is new. The market cap. We didn't break out till what? About 3 years later. I think we're near there from the top. Let's take the top of 2021. That was kind of the top. We're almost there. I'm thinking by early January, and you say this every year. You're like, early January, but I think that's going to happen. So let's see. We're having a blow off top. That arm is rocket. Oh, yeah. That's right. The new IPO arm. There's demand in the market. Exactly. This is another reason why I'm very bullish on the market. There's new capital coming in now. This ARM IPO thing is up 12% today. I mean, look at that chart. It's just one bar. How weird is that? David from Oregon. What up, David from Oregon? What are you into, David? Tech stocks, growth stocks, value stocks, crypto. Trying to learn here. What do you want to get out of what do you want to get out of my channel? What do you guys want to get out of my channel mostly? Look at that big bar. Since the market is pretty boring today, I think we're about to close. But all this, when things get quiet like this, I think I know it could be a downside setup, but I think it's an upside setup. Yeah, what are you guys looking to get out of my content? Blow off to this year. Yep. You know, this oil move has really surprised me. I thought it was going to be more negative for the market. It's always better to be safe than sorry, but I thought the market was going to freak out. So far, it doesn't care, right? Now I'm thinking, yeah, the higher you get, the more worried you are. But this also reflects a strong economy, and that could keep rates higher. Is a strong economy. When I say rates, I'm talking about the bond market, not necessarily the Fed. So I think the market is saying, "Hey, we're stronger than expected. We'll just keep grinding higher. There's new capital coming in. There's a lot of cash on the sideline. AI is going to lower the cost of inflation. Core inflation's coming down in housing. Core inflation's coming down from producers. The only reason producer prices are up at all is literally because oil's up, right? The cost of energy, which profits some people and slows down spending for other consumers. So what does that do? Like to the cost of let me see, I think I was looking at flights, so expensive for a flight. So what does it do? It turns you off. You're like, I'm not gonna buy a flight then. I'm not gonna do it. I'm gonna drive. But you're still paying gas prices, right? So at the end of the day, your money is just converting from one to the other. So when you get too high oil prices, you might just destroy demand even further. I don't think OPEC can keep this up. Maybe I'm wrong. I've been wrong in the past. I didn't think we get above 83.50 and hold, and we're there. We're skyrocketing above it. If a new trader, I would wait to digest next week's info. Might present great opportunities. Oh yeah, if you're a new trader, 100%. Because next week, yeah, let's take a look at what do we got next week. Let's go through the macro we have going up. We're looking at the charts here. Still a bull market. What are the headwinds? Let's take a look at the headwinds right now. Look at this VIX though, 12.9. Are you kidding me? Just barfing, right? Just barfing insurance against the S&P. This is VIX volatility. It did change trend, and now it looks like it's going back down. VIX is just barfing. Oh my God, credit risk. No, there's no credit risk. It's still pretty suppressed, right? This is the long-term credit risk right here. Triple B spreads going nowhere. Not really any credit risk. Put to call ratio actually surprised me. I didn't realize it went up. It made a new high yesterday. Put to call ratio. But why was that? Well, CPI, and it came out better than expected. So those guys also capitulating. Put to call ratio, guys. And this, yeah, I'm talking as a bull. Here, because I think we're in a bull trend, and you don't want to, trade the trend. I'm not day trading here. But I think we get another blow off top pretty soon here. We're getting close to it. I mean, this consolidation looks a lot like it did here, right? It's starting to look a lot like it did back when we bottomed out, and this was January. We bottomed out in January. We consolidated. We hit a high, and then we consolidated for how long did we consolidate here? We consolidated after that high for about 2 months. I would say about 2 months. I mean, we made a new high, but we came back into that area. And now we made a new high. We've been consolidating for 2 months. We're getting close to a breakout, in my view. I think we're getting close. I think we're going to run up into the next earnings and then consolidate again, depending on how bad or how good the macro improves. But this next run, we're going to all-time highs. This next breakout, we're going to all-time highs. D, what up, David? Early morning wake-ups for day trading equities, wanting to learn how to read markets as a whole. Your current content is showing me the way. 100%, bro. Shout out to you. Let me pull the buttons out. I need to get my Stream Deck working. For some stupid reason, it doesn't work with the soundboard when it comes to Apple Mac. Just stop working. I'm not a tech guy. I've hit them up like 20 times, and they don't respond. But here's what I'll do. I'm glad I can help you guys out, man. Macro forces are important. The business cycle is turning up. Like, I get really excited because I'm looking at these swing trades. I think they look solid, right? You want to keep your eye on bond yields. And right now the market is saying, hey, we can hold these bond yields because historically, right? Historically, where the market traded higher with bond yields up here, right? Look at this. From 2002 to 2008, this whole period, the market exploded. And this is why when you hear, oh, higher rates are going to crush the market, bro, not the case. It's just not the case. Let's throw the S&P on here. Okay, let's throw the S&P on here. So this was 2008. We sold off to the lows, and I would argue we're at the lows. You had high rates. Rates were coming down. So this is kind of misleading because rates were going from the highs to the lows, but they climbed higher, right? And you had what? You had rates at 4.5 or bond yields. You had bond yields. Let's go from here. Bond yields at 4.5 to 5.3% for about how long? From 2000 for 4 years. You had rates high. And they did move up and down, but you had high rates and the market moved higher the whole time. It moved up, whatever percent. So we're near that level. Look, if I drag this over, we're there. We could still do higher rates and be okay as long as you get fiscal liquidity, as long as the economy is growing, as long as there's a new catalyst, and that catalyst is AI. And people are still like, oh, AI is not that crazy. There's no real profits. That's because they're underweight. If they're saying that, they're just underweight. A lot of times you talk your book, I talk my book. I look at Tesla 24/7 because I'm obviously in Tesla. I'm obviously in crypto. But I'm not going to lie and say, oh, like Tesla has some downside. If that full self-driving doesn't work out, they're in trouble. If China crashes in the market, they're in trouble. There's a lot of reasons that Tesla could fail, but it doesn't look like it's going to happen. The risk is not in the favor of them failing. They're getting government stimulus. There's a rebate, $7,500 rebate. The governments are spending for electric vehicles. Everybody wants energy storage. There's way more stronger catalyst to the upside. Full self-driving is inevitable. And that's why I'm bullish on Tesla, right? A lot of the macro, a lot of the fiscal, a lot of the secular stories, combining them all together, oil goes up. Well, nobody wants to deal with oil. So anyways, I know I went off on a tangent there, but yeah. And then the dollar, right? If you look at the dollar too, this is surprising me too. I'm like, damn it, dollar's going higher. But the dollar milkshake theory actually says equities could go up with the higher dollar at the same time. The ECB actually just hiked right now today. The European Central Bank hike rates and the dollar went up. That should have been the opposite. The euro, this should have been actually the opposite. We should have seen, I don't even know what the euro is. I never look at it. What is the euro? Is there a euro? The euro currency? I'd have to look at it on another thing. I've never searched the euro, but the euro fell. What the hell? What's going on here? This should have weakened the dollar. It just didn't happen. So, I think the dollar's at its end, and eventually it'll slow down once you get the Fed pause, which could be next week. Could be next week. All right, let's dive into what we see going on here for next week. Oh, more IPOs brings more money to the market. Also, more IPOs. In there like swimwear. If a new trader, but just buy Amazon. If you're a new trader, Amazon should have a lot of upside. I agree 100%. So yeah, I'm glad I could help you guys out. If you guys have questions or like if I could cover, you have deep questions, let me know. I like to answer some stuff that's challenging. I'll go do the research and find out about it. So going to the data, let's see what we got in store over the next couple days. See what we got in store here. And this is just tradingeconomics.com. They have a calendar on there. You can search it by category or by impact. Like you can just go to the most important stuff. I like to see all the data because who knows if they know what's the most important. Like I like to look at all the data. You can go by country. I like to look at the Euro area, Germany, India, the IMF, Japan. I just want to see the biggest economies when I search it. All right. So yeah, Thursday, ECB hikes rates by 25 basis points. It wasn't that big of a hike. And they did this back in 08, 09, I believe. They kept hiking rates and then the economy collapsed and then they cut rates right away. So see if you could probably see it on here too. Here it is, 2008. Look at that. Look at this. This is literally what they did last time. I think they're pulling the same playbook. See that hike? They hiked a little bit. And then boom, they cut they cut to new lows. So I think they're just going to hike and then they're just going to start cutting. That's the playbook right now. And the question is, has the market already priced it in? I think it has for the most part. I'm not saying we don't get a pullback, but we're not going to all-time lows. The S&P is not going to all-time lows. So ECB hikes rates 25 basis points. That should actually strengthen the euro against the dollar, but I guess it didn't happen, which is kind of weird. I'll have to see why. Yeah, let's look at tomorrow. What else went on with Europe? They just had a press conference. What blah blah blah. Oh, we get China tonight. Data, industrial production. How everybody says China's falling apart. It's gonna blow over the global economy. I don't think so. They're printing money. And then we'll see the PBOC 1-year rate. I don't know if they cut rates again, but we'll see what they do. That's coming in tonight, late tonight. We'll see what China does. Tomorrow, wage growth. That's whatever. New York State manufacturing index. Something very interesting. I'm going to go to this really quick. Oh, by the way, there's so much data on here. I just, most people don't care about all the data. Import prices for the US have been negative. So like there's a lot of deflationary pressures. These are import and export prices, how much we're paying import and export. Those have been negative year over year. So more deflation there, right? If you get below zero, you're in deflation, basically. Disinflationary altogether. So what I wanted to look at here really quick when it comes to, this site's too pretty good too, except for they added payments to it, but I like it. So if you go to the manufacturing sectors, here's why I think the business cycle is turning up. I go on a lot of rants sometimes because if you are new, maybe you haven't heard it. I just like to, I like to talk a lot. And I was looking at these regional PMIs. These are basically the business cycle. Most people don't get the business cycle. The business cycle is starting to turn up. We're not heading into a recession. If anything, the economy is cooling and we're starting to turn up. Oh, you got that Tom Lee? I know the Tom Lee. Instacart IPO coming also. Yes, Instacart IPO coming. That's going to be strong. Hey, do me a favor, you guys on TikTok, if you don't mind, go jump on the YouTube and subscribe if you haven't, or just like the video really quick, just to help me out with the algorithm, trying to get up there on YouTube. I'd appreciate it. If not, fine. No Apple, we'll see tomorrow. No AAPL, we will see tomorrow. So the business cycle is turning up, and this is the Chicago Purchasing Manufacturing. So these are basically regions, right? You have Chicago here, you have the New York State Empire, and then you have Philadelphia. So this doesn't show Texas. I wish it had Texas, but the Dallas Fed, I think they're pretty strong. They're turning up also. They're actually over there in Dallas, in Texas, they're using the energy storage networks from Tesla. I think they had like 2 signings, and that's going to be a lot of revenue. So anyway, Chicago PMIs, right? These are basically, these lead GDP. So the way I look at it, GDP is actually backwards looking. So when you see GDP numbers, it's almost like driving a car or if you try to predict the economy by looking at GDP, you're actually looking backwards. It's like driving a car, looking in the rearview mirror, and you're trying to lead that way. It doesn't work. You look at the PMIs, you look at the ISM Purchasing Managers Index, because they are taking a survey of all these supply chain managers, and they're telling you how many orders, how many people they're going to employ, what does their inventory look like. They're telling you, they're basically reporting. There's a lot of stuff on there. You can look at the ism.com. There's a bunch of data on there. So I like to look at new orders. From my understanding, those are the best way to look forward. And new orders have been turning up. So that's the ISM. If you go into other regions, you get Chicago, you get New York. And what we see here is Philadelphia over in Philly. And I think this is Fed Harkin. I've learned these Fed members over the days. This guy's pretty bullish. I mean, I don't want to say bullish. He's pretty dovish. It's Fed Harkin. Is it Harkin? I think his name is Harkin. Anyways, look at that. The Fed, we're back above zero. So manufacturing is starting to leave the recession. I've been saying manufacturing is in a recession. That's starting to turn around here. Philadelphia turning up. Okay. New York still New York's still negative. I don't know why. Not there yet. Rolling recession, right? Chicago turning up, and I believe Dallas is also turning up. So, and Chicago PMI above 50. Yeah, these readings are all a little different. Either way, you're getting the manufacturing sector starting to pick up. So your biggest issue is, does inflation ever reemerge? Because the economy is starting to recover. It is starting to actually recover here. The forward-looking data, not the GDP. You're looking backwards when you do GDP. You don't want to drive looking backwards. Imagine walking on a path and you're using a mirror to look at where you were, that's GDP. Forward-looking GDP, 3 to 6 months ahead, is the ISM numbers, the PMI numbers. Those look forward, right? Those look forward. And so far we've had services leading, right? These are services. They've been positive. They've been holding in there since January. This is where the market really got bullish. Remember January where the market got bullish? Wonder why. That really aligns with the services economy picking back up. It went from 49, which is contraction, which is we're going into recession, to 55, big jump. So that's also coincides with when the market started to break out, right? In January, got very excited because now growth is back. Doesn't mean growth is back for everybody. It means growth is back for those who can hold on. It's not like every stock in the market goes higher. It's the ones who survive. Businesses are always at risk of failing or getting taken over or being disrupted. So durable good orders. I don't know if we need to look at this. Not really. Just looking at some of this macro data. I just wanted to show that. Now, if we combine the PMIs together, ISM, here it is. So you got prices, export. That's a bunch of stuff. Nobody wants to hear about that. ISM PMI, but this is the key one right here. This thing is turning up. You can see in every cycle, it starts to turn up. That's the recovery of the economy. That's when the economy starts to recover. So we're starting to pick back up. Now, maybe we consolidate for another couple months. Who knows? My guess is we get back above this 50 level. Oh, you guys can't see it. My guess is we get back above the 50 level somewhere between November, December, so maybe a couple months, maybe January, maybe it'll take January, but the progress leading up is going to be very bullish for the market. That's going to be very bullish for the market there because it tells you that we're leaving the recession. And if you go to services, okay, where is it? Non-manufacturing is always services. ISM, non-manufacturing. Where is it? Am I blind here? There it is. Services have been positive, like we just said, right? Those have been above 50, and you can't see it. My head's in the way, but this has been above 50. So holistically, in the macro, these lead the business cycle, and they're starting to turn up again, and that's pretty bullish there. So again, manufacturing is turning up. We're gonna get some manufacturing numbers tomorrow too. No, not tomorrow. Yeah, tomorrow. No, tomorrow. Yeah, we'll get that tomorrow. And that is New York State Manufacturing Index. We'll see where they're at. If they they come up. Industrial production, this has been negative. It did dip negative and starting to recover a little bit. So you don't want that negative. That's your productivity. You want that up. But I think we're leaving the bottom. Like the economy, the forward-looking indicators are pointing higher, right? And what that means is if you are a trader trading S&P, you want to lean towards being bullish. We're still in the trend. And then we get Michigan consumer sentiment. We'll see if people are, how they feel about the economy, expectations on inflation, blah, blah, blah. Those probably tick up a little bit because of gas prices. No surprise there. The one key about the market, one of the key things about the market is that it only cares not about bad data or really good data, about being surprised. It does not like to be surprised. Okay. You have all these expectations, you have models, and when you get a negative surprise, that's when the market freaks out. Not so much that inflation went higher if it's expected, it's if it goes higher than expected, and we don't know why. That's the issue. Anyways, next Monday, what do we got? Housing market data. We'll see how the home builders are faring. I know they slowed down a little bit. Maybe they do slow down even more. We'll see. Home builders are slowing, but we know multifamily home is still picking up. Building permits. So we get more housing data next week. We'll get some housing data leading up to the big meeting on Wednesday, the Fed's interest rate decision. I will be live hosting this as usual because that's what I bring you, the macro data, right? Some commentary, some a way to interpret what the hell's going on. That's what you want to know. What the hell is going on here? You're a trader, you're an investor. You hear that, the economy is collapsing. You hear that the market is going to go to all-time lows. You hear all this stuff. What is going on? Do I know the answers? No, but I'm just looking at the data and trying to make an educated guess here. And, people are wondering, why is the market up? Well, I'm telling you why, because inflation core is coming down. The Fed is set to pause the economy's starting to recover. Earnings revisions are going up out of a negative territory. The Fed's reverse repo facility money is coming back into the market, which we haven't seen. And you got AI, which is a big shock to the market. It's like an atom bomb for certain companies. And somebody said in the comments the other day, well, yeah, for the Mag 7, yeah, the Magnificent 7, yeah, that's who leads the index. That's who's leading the indexes. So that's what we got going forward. Anyways, any other questions before we shift gears? Anything you guys want to hear about before tomorrow we get that manufacturing stuff coming in tomorrow? Look out for Tesla gapping up, breaking out. I'm keeping my eye on Tesla, obviously, because I'm swinging Tesla. Swinging Tesla. We called it out earlier in the year. I think down here, yeah. It was this big capitulation to the downside. I literally got in on this day on Friday at 214 at the bottom. What was my signal? It was oversold and market was still in an uptrend. And but I did sell. I did sell at 257. So now I'm looking to add some more, even though I'm already holding some that I'm still holding some others. So dang, if I would have held that 257, boom, could have gapped up. But you don't trade off of what could be, you trade off your rules if you're gonna do that. What up, Carbides? ECB is rate hiking but not going up versus the dollar. Yeah, that's what I was saying is the ECB when you hike, the dollar should actually weaken. That is not the case. I don't know why that happened. I'm gonna listen. I don't know if it's really a significant factor, but I'm gonna have to do some research and figure out why the hell that is. Why is the dollar, right? Why is the dollar not weakening against that? Could be oil. I don't know. So yeah, you're right there, Yassine. That rate hike. Did you Forex trade and say, oh shoot, the dollar should be going lower and you got caught? Because I would have thought that. I would have been like, if for me, I would have been like, hey, if you're Forex, the ECB hikes, go short the dollar. Pfft, wrong. The dollar is trick, or sometimes the markets just don't do what you expect them to do. And I want to know why. An interest rate hike next week would be a surprise to me. 100%. Oh, that'd be a big surprise. The market is pricing in a 97% chance. This is almost the most certain the market has been that there's going to be a pause. So that would be a nasty surprise to the downside. I think if that does happen, we see S&P come back to what 230. I mean, it's not going to be that crazy because it's one hike and the market's like, you can't really do much more. But we probably come back to retest 442, maybe even 438. I don't think we make new lows though. It'd just be it'd be a nasty surprise. Now, if they did 50 basis points, yeah, that would be nasty. We definitely going to reprice to like 431 because then bond yields should break out. The dollar should break out for sure. I thought it would be having impact. Yeah, and two, with currencies, there's so many other factors. I don't know the other factors going on. I don't know what the other factors going on are. What is the euro looking like? I want to see really quick what happened here. It's just euro USD. Okay. Priority, no, huh? Yassine. I'm still in the trade. Oh, those are euro futures. I don't know if these are. Oh, no, it looks stupid. Euro USD. Yeah, that's weird. I don't know. Let's see. Maybe why did the ECB go negative? You're still in the trade. What trade are you in? Hey, Carbides, we were right, man. You were right. We broke out. There was no expectation for the hike. Let's see. I think people are saying that it was the final hike because it was such a surprise that it was the final hike and they're going to start cutting rates. Remember, we looked We just took a look at the chart. Last time they did this, they hiked and turned around really quick. I'm in a gold short still. It's not going down while the dollar is going up. Normally gold goes down. Something weird. Yeah, something weird. Something's changing in the market because you have stocks still going up regardless of dollar up, yields up, gas up, dollars up. That's what I was pointing out. VIX is down. Maybe that changes tomorrow, but something is changing. So we got to take a step back and say, what the hell is happening? What's changing in the market right now? Why are the correlations switching up on us? There could be new capital just coming into stocks. That's weird. Yeah. Oh, okay, here we go. Why the euro fell. I'm going to listen to what this girl says.
Was able to explain that real time. So there appears to be a lot of confusion about why the euro fell after the European Central Bank's monetary policy announcement. I was live tweeting it. I was able to explain that real time. For those of you that weren't there, this is basically a dovish hike because even though the ECB raised interest rates 25 basis points and it was like a 60-40 chance that they were going to keep rates unchanged, the economic projections and the language and the guidance from ECB President Lagarde was not as hawkish as the market had really needed for the euro to rally. First and foremost, when the rate hike came, it came with the economic projections, which showed a lower inflation forecast for 2025. The ECB also lowered their GDP forecast. So, and the comments that came with it suggested that, this could be the last rate hike in the cycle. Then ECB President Lagarde came out. She delivered a speech. And while, she...
Okay, so first part, even though they hiked, their commentary was GDP is going lower, inflation forecasts are actually lower. So it was almost like a desperation hike, and the market is now, I always tell you guys, the markets look 6 to 12 months ahead. They're not trading off today. They're trading off what is going to be. So even though they hiked rates, the euro still fell because the market is anticipating that they cut rates going forward based off the projections.
She did not say that they're at peak rates. Everything else she said suggested that they are. She basically said that she believes that the current level of interest rates is sufficient to bring inflation back down to 2%, which is really what they are trying to achieve. She said the decision was almost unanimous, with most members supporting the rate hike, but there were some that wanted to pause. And she did emphasize, the deterioration in growth. She emphasized the slowdown in economic activity. Nothing out of her statement was really significantly hawkish. And so not only did the euro sell off after the initial rate hike, but it also remains weak and continued to trend lower after her press conference. The bottom line is I think the market is going to think that the ECB is done for now. We'll have to see
Oops.
if there's any other comments that come afterwards to suggest it. She hasn't completely shut the door on tightening, but I think, her language is certainly getting there. So hopefully that makes sense to you. Have a great day.
What a dovish hike. Interesting. A dovish hike. So hey, maybe Powell pulls this off. This could be the setup for Powell. That's a question is are we going to see a dovish hike from Powell? Maybe hikes one more time. Not this meeting, but next meeting he hikes, then all of a sudden cuts, or hikes and says we're done. This is it, right? Yassine, is the dollar that strong? Yeah, I thought maybe you could explain. I am really confused. Yeah, so it sounds like the market over there basically is saying that they're basically communicating because the ECB has a track record or history of hiking rates and then cutting. So they're hiking. They're actually not trying to do a soft landing. They're trying to do a hard landing. So they hike, boom, the economy falls apart. Their projections are all dovish. All their projections are weaker inflation, weaker GDP. So that's why even interest rate moves, you got to stay with the language to hear how the market wants to react, not necessarily just what they do, but also what is their language? What are they saying going forward? Because the market's always looking for the future. The market's always looking for, what are you going to do later? What is the probability, or what's the probability later? So again, and this is kind of tricky, there is economic data that the market feeds off of, and then there's economic data on what the Fed feeds off of. They're two different things. They're intertwined, but they're different. As in, retail sales stronger than expected. The market liked it because it's no recession. But the Fed might say that gives us more reason to hike. Although we know that's not enough reason to hike, right? Okay, core PPI lower. right? What's going to get the Fed to really pause? It's the core PPI lower, not the retail sales. Everybody's like, oh, retail sales are low. I mean, higher than expected on a month over month basis, not a year over year basis. So all of a sudden, people are saying, oh, inflation's coming back. The retail sales were too hot. The Fed's not going to like that. No, the Fed is focused on PPI, specifically core housing, right? Core. So the core was lower, and that's what the Fed's going to feed off of. The market is like, oh, okay, well, core's lower. That's good. Number two, retail sales were hotter, no recession. And everybody said, oh, well, just wait till the student loan repayments. It's like throwing a pumpkin seed in a glass of water. It's going to make a small splash. It's not that serious, right? If you get if you do get real estate collapse, that's not going to happen either. The rollover isn't till 20, like later down the road, but everything just gets pushed down the road, guys. That's what's going on here. All the risks are just getting pushed down the road as always. Oh, well, you can't change the business cycle. You can't. But what the hell's been going on for the last 20 years? The Fed is literally changing the business cycle. They're implementing monetary policy to further the business cycle. The only reason we get sharp recessions are from black swan shock type events. Okay, 2008, black swan. 2014, I mean, it wasn't really that big of a recession, and we kind of had a recession. Stock market sold off because of geopolitical risks, right? Black swanish. 2018, we're teetering to a recession in 2018, and then the Fed, what do? They stopped hiking, they paused, and they started cutting from there. Market recovered, right? So this was going into 2019. And so the Fed has control of everything. They're not trying to crash the markets because they won't exist anymore. The market is the collateral to the financial system. Equities are the collateral. Real estate is a collateral. They don't want to crash it. They just need to do something to slow down inflation, right? I think it's going to be housing that takes the biggest hit. Housing prices decline. If you're looking to buy a house, you really just want to chill because you want to look at that year over year inflation. And as that inflation comes down for housing, prices are going to stabilize or go lower depending on what region you're looking at. And then once the Fed can cut rates, then you're going to get a little bit of bullishness in the housing market. Okay, finally, but you want to wait till they cut. And then boom, housing inflation is low and it lags. So even if they cut, prices don't go higher. It's lagging data. Prices still go lower or stay where they're at. And then, you get lower rates. So, I mean, I think that's the play here. Oh, could I share a link of this video? Yeah. Sorry, I just saw that. And see if I can find it. Should have been in my history. Too bad you can't search what you just shared. Oh, there it is. ECB hike. Let's see if I can. There it is. Share. Copy link. I'm going to put it in the comments. Copy and paste it. Let me know if it's in there, but that's it right there. That's the link. It's to Twitter. Why the ECB hiked. So yeah, let's go through a little bit of the feed. I mean, man, it's a good setup. It's a very bullish setup. Let me see if I find anything else while we're on here. FactSet, GLG, FactSet, Collaborate. Yeah, that's it. I mean, that's it. Well, that's it for me. I'll be on again tomorrow. I'll see you guys tomorrow. Okay, 2:45 Eastern time. Should be on time. Sometimes I'm black, so give me some slack. 5-10 minutes. Guys know black people are late. 5-10 minutes late usually. So 2:45. That's the target. I don't think there's a whole lot of crazy data. We're going into Friday, right? There's what is it? There's not triple B spreads. Triple witching. People say that's bearish. So maybe we get a slight sell off early. Recovery, maybe we just trade sideways. We don't know. There's a lot of uncertainty right now. Nobody knows where price action will go. We just gotta track price action and then align that with the macro. So Again, the economy is cooling. We're in Goldilocks right now. Inflation is decelerating outside of energy, okay, which is volatile. It goes up and down. Core inflation is coming down. That's what the Fed's focused on. We're expecting a pause. We're expecting the Fed to pause, and that's about it. All right, you guys stay blessed. Keep a strong mindset. Don't let nobody put you down. Okay, no, I'm just kidding. That sounds cheesy, but for the most part, I would just say be patient, right? Stay patient if you're an investor. I think there's some big catalyst on the rise over these next couple months. I think we're going to see some big catalysts, some big upside catalysts. Okay. And outside of that, yeah, make sure you guys take care of your health. Take care of your health. Take care of your mindset. Get enough sleep. Go work out. Don't be lazy. Aim high. Focus on the day. And you guys stay blessed. I'll catch you later.